Hi everybody, my name is Faith here at Patrick and Rains. It's a pleasure to welcome you and thank you for attending our digital seminar on the PPP Forgiveness Program, Peeling Away the Secrets of PPP Loan Forgiveness. We know this is still a really hot topic and there are a lot of questions that still need answers. We're still peeling away at this topic, which has evolved a great deal over the last few months. If you have any additional questions, please feel free to get in touch with us. All contact information will be in the description box below. This digital seminar will be split up into multiple parts, so stay tuned for more. Okay, we're going to start with some speaker introductions, where we are with the Paycheck Protection Program, SBA and AICPA questions and answers, and some concluding remarks. The information provided in this presentation is for general and educational purposes only. This information is not to be used as legal, accounting, or tax advice for your unique situation. Starting off with speakers, we have Mark Patrick, the lead partner. We have Tim Raines, our tax partner. Chris Loudy, our tax manager. Starting with the first question, can a borrower whose loan was received prior to June 5th, 2020 use the June 30th, 2020 salary or hourly wage reduction and FTE reduction safe harbors instead of December 31st, 2020?
And I'll take that question, and the answer is no. The Paycheck Program Flexibility Act of 2020 was an actual replacement or edit of the original law that was part of the CARES Act. So it changes now that date to December 31st, 2020.
Moving on to the second question. What is the maximum amount of cash compensation for employees and owner employees for the 24-week covered period that is eligible for forgiveness?
Great question. I'll handle that one. For the maximum compensation for employees, now that they've extended the time period to 24 weeks, you're allowed to use 24 divided by 52 times the maximum of 100,000 for each employee. So that brings your maximum per employee to the 46,154. However, even though they've extended the 24-week period for owners, owner compensation and self-employed individuals, as well as general partners, they didn't really extend that. You're still looking at 2.5 months worth of compensation. So you take the 100,000 and you multiply it times 2.5 divided by 12. That brings you only up to 20,833. So the maximum for employees, 46,154. The maximum for owner employees, self-employed individuals, and general partners, you're still limited to 20,833.
Excellent. On to the third question. What guidance has been issued related to loan forgiveness?
Look at this one. The Small Business Administration released a revised loan forgiveness application on June 17th of 2020. In addition to this, they also included a simplified loan application. This application can be used by self-employed individuals, borrowers who do not have a salary or hourly wage reduction and are unable to operate during the covered period at the same level of business activity as before.
Fourth question. When does the covered period, 24 weeks or 8 weeks, begin to determine the amount of forgiveness for the Paycheck Protection Program loan?
This again was a revision because of the Forgiveness Act, and the covered period begins on the date the lender funds your loan. Most of you watching will have already had your loan funded and will be considering the time, whether it's 8 weeks or 24 weeks, to make your application. The lender had to make the funding 10 days, no more than 10 days after the application was done. June 5th is the cutoff date where you can decide whether to go to the 8-week versus 24-week. That's when this new law passed. Borrowers who received loans June 5th or later will have the 24-week covered period automatically. The loan forgiveness application released on May 15th, 2020 provides for an alternative payroll covered period. Borrowers with a biweekly or more frequent payroll schedule may elect to calculate eligible payroll using the 24-week or 8-week, if elected, period that begins on the first day of the first pay period following the loan disbursement date. It will make it easier for some people to qualify by using an alternative beginning date rather than the actual funding date.
Fifth question, when can a borrower apply for forgiveness?
This is actually a frequently asked question. Lots of phone calls about this one. The forgiveness application actually allows a borrower to apply for forgiveness prior to December 31st of 2020. However, there's still a lot of ambiguity about this issue. One, banks aren't really ready to begin accepting those applications. So we're really going to wait for additional guidance as to whether you can apply before the 31st, but we do know that you're going to be able to most likely after your 24-week period is over.
Question number 6. What are the acceptable uses of the PPP funds for businesses other than self-employed individuals?
Acceptable uses include payroll costs, healthcare benefits, mortgage interest payments, rent, utility, interest payments on debt incurred prior to February 15, 2020, and or refinancing a SBA economic injury disaster loan made between January 31st, 2020 and April 3rd, 2020.
Question number 7. What is included in utilities?
I'm looking for some guidance on some of these areas, but fundamentally the CARES Act defined utilities in section 1106A5 as electricity, gas, water, transportation for which we have no definition, telephone or internet access for services under contract prior to February 15, 2020. Further guidance released added gas when used in driving a business vehicle. Other common utilities such as garbage collection or security monitoring may also be classified as utility, but a business should confirm that with the lending institution because again, we have no guidance on that point.
Question number 8. When determining the potential reduction of loan forgiveness due to workforce reductions, what method is used to determine employees?
I'm happy to answer that. This is one of the questions that has evolved since a couple of our videos prior. So the CARES Act is going to use what they call this full-time equivalent employee, the FTEs, to determine whether the loan forgiveness must be reduced in a measurement. So they're taking a factor of full-time equivalents. The loan forgiveness application will provide this calculation for the average full-time equivalent. It's basically based on the number of hours paid per week divided by 40 and then rounded to the nearest tenth. The maximum for any employee, so somebody who may have worked a lot of overtime, is still going to be 1 full-time equivalent. They are providing a simplified method, which will apply a factor of 1 for each employee who works 40 hours or more, and 0.5 for any employee who works fewer than 40 hours.
Question number 9. What are the acceptable uses of the PPP funds for self-employed individuals?
An owner compensation replacement, employee payroll costs, business mortgage interest payments on real and personal property incurred before February 15, 2020, business rent for real personal property for lease agreements in place before February 15, 2020, business utility payments for services that began before February 15, 2020, interest payments on debt obligations incurred before February 15, 2020, refinancing an SBA EIDL loan made between January 31st, 2020 and April 3rd, 2020. Note that the individual must also have claimed or been entitled to claim a deduction for the included expenses on their 2019 Form 1040 Schedule C.
Question number 10. What amounts will be eligible for forgiveness for self-employed individuals?
This is where it gets a little deep when you're working through the application. The amount of the loan forgiveness will depend on the amount spent, actually paid out during the covered period, on payroll costs as defined by the SBA's interim rule, does not include benefits for owners. Owner compensation replacement limited to the lesser of 2.5-month equivalent, 2.5-month equivalent of 2019 compensation for a maximum of $20,833 for the 24-week covered period. If electing the 8-week covered period, it's 8 divided by 52, or 8 weeks of the 2019 net profit, with a maximum of $15,385 for the covered period, and excluding any qualified sick or family leave equivalent amount for which the credit was claimed under the FFCRA, the Family Leave Credit Act. 2020 compensation paid during the covered period. Interest payments on mortgage applications for real and personal property paid or incurred before February 15, 2020. Rent paid or incurred on lease arrangements enforced before February 15, 2020. Utilities paid or incurred under service agreements dated before February 15, 2020. Note that for interest, rent, and utility payments, the amounts must be deductible on Form 1040 Schedule C.
Question 11. What amounts are included for health insurance and retirement for owner employees?
Good question. Glad the SBA has finally made some rulings about this. Unfortunately, it's not good news. The employer self-employed contributions are not included for self-employed individuals or general partners, owner employees of an S corporation. They're just not going to be allowed in the calculation. The same thing with employer retirement contributions made on behalf of self-employed individuals and general partners. These will not be included. However, they did clarify that employer retirement contributions made on behalf of an employee owner of an S corporation, those would be allowable.
Question 12. Are employee federal withholdings and employer payroll taxes on wages for the covered period included in payroll costs?
The employee federal withholding is included in the allowable payroll costs for the period in determining the amount forgiven, but the employer federal payroll costs, such as FICA and Medicare taxes, will not be eligible for the loan forgiveness calculation.
Question 13. What are the restrictions on determining the amount of loan forgiveness for businesses other than self-employed individuals?
Eligible non-payroll costs cannot exceed 40% of the total forgiveness amount. You may have heard the 60% rule, and that's the flip side of exactly the same thing. Your wages need to be at least 60% of the total loan. If salaries decrease by more than 25% for any non-owner employee who made less than $100,000 annualized in 2019, or if the number of FTEs decreases, the forgiveness amount will be reduced unless safe harbors are met.
Question 14. Do qualified sick and family leave wages, which are eligible for a tax credit under the FFCRA, count towards payroll costs for the purpose of the forgiveness portion?
Unfortunately not. Won't be able to double dip. So for a business to take the credit, those wages will be excluded from determining your payroll cost. Just want to take an opportunity to say thank you for joining us in this webinar. You may have noticed we've got a couple. If you like what we're doing here, please click subscribe. Be on the lookout for other CPA Minute topics in the future. But please keep in mind that the PPP loan is ever changing. It seems to be evolving every week. So the videos that we produce are accurate as of the day we produce them and upload them. But please keep us in mind for your future needs. If you need any help, got any questions, feel free to reach out to us. Subscribe, email us, we're happy to help.